All right, guys, today I'm going to be doing a little trade recap of a long position that I'd called inside of the Pro Discord. I think this is a really good learning moment for you guys out there that are still trying to spot high probability setups and A+ setups. This is just like a textbook trade. Very, very simple trade. It's not that hard to identify. There's so many confluences. These are the kinds of trades that you guys should be taking. So without further ado, let us jump into this. I'm going to make this video as raw and uncut as possible, just trying to give you guys as much value as I can on this YouTube channel for free. So make sure before I get into this to leave a like on the video, comment something down in the comment section below, and let us jump into it. So SUI, okay, this is a long position that I called. The first thing I do before I enter any position is I do a top-down analysis, meaning I'll go to a daily time frame, and what I'm trying to do on a daily time frame are a couple things, okay? The first thing is I'm trying to identify the overall trend of the market. There's a few different ways to do this, but really just use your eyeballs, okay? I'm looking for higher highs and higher lows on a higher time frame. So I can see here on a daily time frame, we saw this large expansion move up, breaking structure. Then we saw a higher low, right? If we zoom out, we can see that this low is higher than this low, okay? So we are in an uptrend, and we had broken this market structure right here as well, right? Creating another higher high or another market structure break, market structure shift, whatever you want to call it. So my bias is bullish. Now, another reason why I was long is because we had this draw on liquidity right here. Now, what is a draw on liquidity? Well, this is where price is expected to go, okay? Because liquidity moves markets. Liquidity meaning, open or resting orders. Liquidity is also, on your chart at all times, right? There's liquidity everywhere. But anytime you have these very key levels, right? This very clear high or this very clear low, these are strong draws on liquidity, okay? So what I saw was that not only did we have this high right here, and obviously since we're bullish, we are expecting the trend to continue, right? Creating higher highs and higher lows, but we also had another lower high right here on like a 4-hour time frame. So this high did not sweep this major external high, creating an equal high. So anytime you see, let's say, one high and then a second high that is slightly lower than that first high, this is referred to as an equal high, okay? An equal high, which just means strong draw on liquidity, okay? There's a lot of resting orders here, not only above this high, but also above this high. So we can expect market makers to push the price up to these open orders because, again, liquidity is what actually moves price. So going into this trade, I understood, okay, our higher time frame trend, our higher time frame bias is bullish, and we have an equal high here. We have this major external high, and we have this lower high that's right below that first high. So all I'm doing now is I'm looking for a long entry on any notable retrace back up to this external high, which in this case was our second take profit. And you can see that price is actually rejecting from this level as I make this video. So let's go into replay mode here, okay? So I can show you guys what I was looking at, what my thought process was like as we were approaching this level. So at this point, I'm dropping down to a 4-hour time frame. This is where I identify my key levels because even though I understand that price is most likely going to go up to this high at some point, I don't want to just FOMO in along right here, right? This is how you get stopped out because even though our bias is bullish, price will still give us a retrace and that will be our entry. So again, this is my key level and key fib strategy. So the first thing I'm looking for is a key level with price history. Now, this was an easy algo support level. So if you guys are having trouble finding these levels for yourself, if you're still a beginner trader, you can get access to our easy algo trading indicator, which will be the first link in the description below. And it will actually give you these levels, okay? So all you're looking for are levels with price history. So what does price history mean? Well, price history is a level that has been respected well in the past. So this 4-hour support zone here was a level with price history, okay? If I look to the left, what do you notice about this level? Well, we've actually rejected from this level multiple times in the past, acting as resistance, and we've actually broken out of this level with a strong bullish candle, right? Strong bullish candle, leaving behind a bullish fair value gap, creating a higher time frame order block at this level, also aligning with our key level with price history. So we have a few different confluences here telling us that we can go long on a retrace. And also we have our key Fibonacci retracement zone, which if we draw the fib from that swing low to that swing high, we can see that our optimal trade entry, meaning our 618 to 786 Fibonacci retracement levels, this zone here is referred to as the optimal trade entry. Whenever you see your optimal trade entry overlapping your key level, it just adds another level of confidence as well. And another thing I like to look at is the fixed range volume profile. In this case, we didn't have any fixed range volume profile confluence, but this was such a key level, I was confident in taking a trade here, okay? So at this point, all I'm doing is I'm marking my level. I marked this one high right here, and I also marked this level right here, okay? Because I was actually entering this trade as a dollar cost average order, meaning I have two entries on this. One entry right here and a second entry down here in case we see lower, bringing my average entry down to here with my stop loss below this previous level, okay? So this was my trade thesis. Again, I'm posting this in real time inside of my pro Discord. I have my levels set in advance, okay? So I'm not FOMOing my trade. I'm not being unemotional. I have my levels set. If price comes to my level, I will look for longs. If for some reason it doesn't come down to my level, I don't look for longs, okay? It's very important when you're trading to be unemotional, follow your strategy, follow your system, and make plans in advance, okay? So we're gonna turn off these support levels here. So, okay, boom. I understand this is my key level. This is where I am looking for a long position. Now we need to look for an entry. So how do you actually find an entry? Well, I use something called a multi-timeframe divergence analysis. Now, I know this sounds complicated. It's very, very simple. What I want to see is going down to a lower time frame, I want to see bullish divergences, meaning as price is making a lower low, I want to see momentum create a higher low on a lower time frame. So as price is going down, momentum is increasing to the upside. This is referred to as a bullish divergence. This is what I use for my entry confirmation 99% of the time. So I have my plan in advance. All I'm waiting for now is for price to reach this level. So we're gonna let price play out here. Okay, so here we are on the 1 hour time frame. Now you might notice on my chart, I have this ABC pattern, right? This Elliott wave pattern. Now, a lot of people overcomplicate the shit out of Elliott wave. It's very simple. All this is showing me, okay, this ABC correction is a corrective pullback. So when you are looking for long positions, when you are looking for a retrace into a key level, you want to see an ABC correction or a corrective pullback, okay? This is not a straight up and straight move down, okay? Whenever you see a move like this, where you have price go straight up and then immediately come straight down, right? I never like to look for longs after a move like this. I like to see a corrective pullback or what I call a soft landing, right? So price will create that impulse move to the upside, and then it will kind of consolidate for a bit and then finally come back down into our level. Now, another reason that this was such a high probability trade is that not only do we have our key level here, we also have a few liquidity lows here as well. So we have this one low right here and another low right here. Okay, so we have two lows that we are actually taking out as we are coming into our key level. Okay, this is just another piece of confluence. That is where we enter the long position once retail gets stopped out. Because if you think about retail, they are putting their stop losses below these lows. And when are we entering? Well, we are entering after these lows are taken out into our higher time frame area of interest, our point of interest, and that is where we enter the trade. Now, a lot of people ask me, Matt, how do you actually enter the trade? Do you enter via a market order or do you enter via a limit order? Okay, 90% of the time I enter via a market order. In that case, you can set an alert at a level or you can set limit orders. The only thing with limit orders is that you need to still set an alert or at least know where price is before it comes down to your level. Okay, so for example, on the 1 hour time frame, I'm still anticipating an entry at my key zone right here. And as soon as I see we have this buy dot on the oscillator right here, right above our key level, at this point, I can set a limit order at this level for my DCA entry. And the reason being is I am anticipating that bullish divergence. Okay, so at this point in time, as price is coming down to this level and I see that the oscillator is oversold, this is just something that you'll have to pick up over time. I'm just anticipating that final sweep coming down into our key level, creating a higher low on our oscillator with that divergence. So at this point in time, anywhere around here, you can set a limit order for this level for your long position. And if you wanted to wait for that final piece of entry confirmation, you can wait for that bullish divergence to confirm. In fact, this would have been your entry right here. Again, bullish divergences are forming here. We see that buy dot and we can see a clear bullish divergence, right? I don't have to guess whether we are seeing a bullish divergence. I can clearly see momentum is increasing to the upside as price is taking out that low. So again, price and momentum are doing the opposite. This is a bullish divergence. And we see my manipulation model playing out in real time. All that is a sweep of external liquidity. In this case, we have a sweep of internal liquidity into an inverse fair value gap, reclaiming that inverse fair value gap with that buy signal. So if you didn't catch this limit order entry, you could enter the long right here with your stop loss below that inverse fair value gap. Again, we can see that bullish divergences are forming on our oscillator. So this trade is valid. On the next candle, we see that bullish divergence confirms, and then we let the trade ride, targeting the external liquidity as our take profit. We also have this low resistance liquidity trend here. All this means is just a bearish trend line. This is showing us equal highs in the market that we can target as take profits. First take profit is going to be at this high right here, and our second take profit is going to be at that major external high that we had marked out all the way to the left right here. So these are our two take profits. We set and forget, we enter the trade, set our stop loss, and set our take profits. And there was our TP2. So at peak, this was around a 5 risk to reward. If you had caught that initial entry, you'd be sitting at around a 1 to 3 risk to reward on this trade. Now, again, the reason that this system works so well is due to the amount of confluences, okay? We have our higher time frame bias, we have our higher time frame trend, we have our higher time frame draw on liquidity, which in this case is this external high, and we have our key level with multiple pieces of confluence. We have higher time frame order blocks, higher time frame support level on the easy algo indicator with price history, our optimal trade entry with our fib zone, going down to a lower time frame, looking for those bullish divergences as price is coming into our level. So when you're stacking so many confluences on top of each other, it makes it very, very difficult for the trade to fail. Now, will you still get stop outs with this trading system? Of course you will. No trading strategy has a 100% win rate, but all trading comes down to is a slight edge in the markets. And when you're using the system that I'm showing you guys, when you're trading pairs that are showing relative strength, when you're waiting for those high probability A+ setups, you will be much more profitable than you will lose money. I hope you guys found value in this little trade recap. Let me know if you guys want to see more trade recaps like this, breaking down my trades, breaking down the systems and the thought process behind each trade. If you guys want access to the indicators on my screen here, including the easy algo indicator, as well as my custom trading oscillator, the easy oscillator, which gives you these real-time bullish and bearish divergences, make sure to click the first link in the description below. Subscribe to the channel for more trading content, and I will see you guys next video.